Welcome back to the channel that is going to bring you financial news releases in the most digestible manner. Starting off with the FTSE, which recently reached an all-time high due to a combination of strong performances from major sectors, including energy, mining, banking, and the defense sector. The second story is very interesting with our two lovebirds, Mr. Jerome Powell and Mr. Donald J. Trump, which their love romance story continues to move ahead in the financial markets. And this was the best interaction we have seen between the two lovebirds in quite a bit of time. The commitment of traders report has just been updated, and there is something very interesting to note with how smart money did buy into the markets, and we will discuss that among what we are going to anticipate in the financial markets coming this week. Consider subscribing, hit the like button, hit the share button. Let's get it on. The FTSE did hit an all-time high, closing above the 9,000 region for the first time in history, and the key contributors starting off were the mining sector, thanks to surging commodity prices like iron ore, copper, and precious metal. In the banking sector, HSBC, Lloyd's Banking Group, stood out with strong earnings, rising interest rate margins, and dividends, boosting investor sentiment. The defense sector performed strongly amid rising government spending. Companies like the BAE System, the Babco, Quintech, Cohort, and engineering names like Rolls-Royce all posted robust performance. The Cohort in particular saw a 20% increase in its order book and share price gains to record levels. The healthcare and the pharmaceutical sector were not left behind, with AstraZeneca posting a gain last week following positive drug developments and strong results, contributing meaningfully given their large weightings in the FTSE index. The consumer and retail were not left behind, starting over with the Reckitt Benkinser surged after increasing its full year revenue forecast above 10% while posted strong earnings, lifting the broader consumer and retail sector. The telecom and tech sector were not left behind, with the BT Group posting 12.75% in the last trading week. BT jumped 7.6% on the appointment of its first female CFO, and Vodafone were not left behind, closing at 3.18% as a result of strong revenue growth, giving further lift to the FTSE index.
We have a bad Fed chairman, really bad. If he would lower the rates, and I tried being nice to the guy, it doesn't help. He's like a knucklehead. No, he's a knucklehead. A stupid guy. He really is.
It was quite the interesting affair currently ongoing, with President Donald J. Trump wanting Jerome Powell to lower the interest rates, while at the same time Jerome Powell didn't seem particularly excited or impressed with Donald Trump's presence in inspecting the building and ongoing renovations.
We're looking at the construction, and we're with the chairman, as you know. Chairman, come on over. And we're just taking a look at what's happening. You know, it's a tough construction job. They're building basements where they didn't exist or expanding them, and a lot of very expensive work. There's no question about it. And Tim has been with me for a long time, and you're in charge of the committee.
Indeed. One of the reasons I wanted to see it was the overruns of the expenses. Wanted to figure out why.
Yeah. So we're taking a look, and it looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1.
3.2.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added.
Our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building,
Well,
including
no,
the
but
Martin building.
it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But it's
So,
not new.
So we're going to take a look. We're going to see what's happening. and it's got a long way. Do you expect any more additional cost overruns?
Don't expect them. We're ready for them, but we have a little bit of a reserve that we may use, but no, we don't. We expect to be finished in 2027. We're well along, as you can see.
As a real estate developer, what would you do with a project manager who would be over budget?
Generally speaking, what would I do? I'd fire them.
Are there things the chairman can say to you today that would make you back off some of the earlier criticism?
Well, I'd love him to lower interest rates, but other than that, what can I tell you?
Now, this could come at a critical time because on Wednesday, July 30th, we do anticipate the federal funds rate and the FOMC statement. 30 minutes later, we are going to have the press conference whereby we do anticipate a lot of volatility. The pot is brewing, and what could the markets have in store for us this upcoming week? Stay tuned. The commitment of traders report has just been updated, and let's dig into something very interesting that I've noticed with how smart money have moved their positions this past week. I want us to focus on metals, and we want to go to the futures only short format and scroll down to the precious metal on gold, which is going to be in this sector here. We want to focus on the managed money. As you can see, this is all futures combined position as of July 22nd, 2025. And this is information from July 15th. From July of 15th to 22nd, we did see institutions adding 22,096 long positions on gold, while at the same time we did see almost 1,111 positions being offloaded from shorts. We want to focus on the managed money. This is where the big institutions, the big players, the hedge, basically people who, these are the deep pockets in the financial markets, and digesting this data, institutions are favoring more long positions while they are adding to more net long positions. They have offloaded some of the short positions. What does this mean for the precious metal? Institutions are favoring more buying opportunities. Could we see this as an opportunity whereby institutions are starting to price in interest rate cuts as early as now, even way before we do have the speech from Jerome Powell this upcoming week? Looking at the economic calendar, Monday is going to be a relatively quiet day for us traders in the financial markets. Tuesday activity is going to pick up during New York session, whereby we do anticipate jolt job openings, whereby the numbers are anticipated to come out slightly lower as per the forecast. Wednesday is whereby the markets will start beating. Starting off with Asian session, we do anticipate the CPI numbers for the quarter and the year on the Aussie to come out at 4:30 a.m. Nairobi time. Later on during New York session, we do anticipate advanced GDP quarterly numbers on the United States of America at 4:45 p.m. The Bank of Canada are anticipated to release their overnight rate, whereby we do anticipate the Bank of Canada to hold the interest rates at 2.75%. The highlight of Wednesday is going to be federal funds rate, whereby we do anticipate the numbers to come out at 4.5%. But could we see a surprise interest rate cut as a result of everything that's been happening in the previous week? All of this will be answered in the press conference that will be due to happen 30 minutes later after the federal funds rate are released. Moving over to Thursday, during Asian session, the Chinese yuan are going to release their manufacturing PMI numbers. Bank of Japan later onwards, before Asian session does close, we do anticipate them to release their policy rate. Most of the times we do have this tentative, but it usually comes before Asian session does close. During New York session on Thursday, we do anticipate GDP numbers, the personal consumption expenditure numbers for the United States, and the employment cost index also for the United States, along with the unemployment claims. Friday, August the 1st, Also being the first trading day of the monthly candlestick, we do anticipate non-farm payroll, whereby the numbers are anticipated to come out actually lesser than the previous number, which came out at 147,000. Forecast has it at 108,000 jobs being created, while unemployment rate, we do anticipate it to have a slight uptick to 4.2%, down from 4.1% on the previous number, with the average hourly earnings having a slight uptick from 0.2 to 0.3 on the forecast. The week is going to conclude with the ISM manufacturing PMI numbers, whereby we do anticipate it to have a slight uptick from the previous number, and this is going to be one of the most interesting trading weeks, which is going to depict how the second half of the year is going to conclude. Switching gears to the charts, starting off with the precious metal, gold has been in a consolidation for the past 100 trading days, and this could be bound to change in the next few trading sessions, whereby if the Fed Reserve do hint at cutting interest rates, this could prove very good for gold in terms of gold moving back to all-time highs, especially after the positive data from the commitment of traders, whereby we have seen institutions have been adding extensively long positions on gold, and I would want to see, scrolling it down to the 1 hour charts, we did see last week gold gaining almost 4% of its total value within 5 days, 15 hours of trading ever since July 17th, just 2 days after the commitment of traders was updated, whereby we did see 22,000 positions being added on gold. Gold did surge to the upper side. Gold did give back its gains as a result of the US-Japan trade deals.
I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. And that was done with Japan. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. But we're doing really well as a country. We're strong. We have a lot of money flowing in. The tariffs are kicked in better than anybody other than me and a few of the people in the room thought could happen, Howard and Scott. And I just want to thank you. You've been unbelievable allies, because you're really allies. That's what you've been, and we appreciate it. Some were very difficult, but you got there.
But could this be an opportunity of institutions have already shown interest in buying gold as a result of the commitment of traders and all the data backing more long opportunities on the precious metal, that we might see gold pushing back to 3442 region and even further to all-time highs? Looking at silver, similar opportunities could be felt in the financial marketplace, whereby we did break the most recent higher highs and the markets has respected this region of support. As you can see, we did have regions of liquidity that was taken out for a further push to the upper side, and the market did close above this region of support, meaning that also institutions could be favoring that more long opportunities on the silver metal could be upcoming in the next few trading sessions. The dollar index has been moving lower to the downside as a result of the weakness in the dollar index, and this could mean that if the weakness in the United States dollar continue to persist, then we might be buying everything against the United States dollar. The volatility index did close below the 14.9 region last week, signifying that the market could go back to normal trading conditions. The market could be more susceptible to sentiment and fundamental news releases in the next few trading sessions. The S&P 500 has been rallying to the upper side, and I would want to look at short-term retracement adding to more long opportunities, looking at longs on the S&P 500, especially if the Fed Reserve do decide to cut interest rates. Then this means it's going to be good for equities, which relates to more higher prices on the S&P 500. The same could be said to Nasdaq, the US 30, and the Russell 2000, which are going to benefit highly if the Fed Reserve do hint at lower interest rates upcoming this week. And the FTSE did gain, as mentioned earlier in this video. The FTSE did tap into all-time highs above the 9,145 region, and this could move even further to the upper side whenever prices are making all-time highs. Yes, you cannot catch falling knives or rising knives, but if we do break above the most recent all-time high, we do get a retracement back into this region of 9,000 region. I would want to see also more long opportunities on the FTSE. Treasuries have been very interesting of late, whereby we could see the treasuries market take a further beating to the downside, especially if the Fed do hint at lowering interest rates in the upcoming few trading months, whereby it's going to make the bond markets quite unattractive in the financial markets, and this could weaken the long-term treasuries in the financial markets of the US. Moving over to black gold, it has been holding above the $60 a barrel of late, and this could be very pinnacle. Looking at how the markets has been consolidating around this region, we could see inflation pick up if prices of oil continue moving further to the upper side, and if it does move to the downside, then this could mean deflationary measures, especially after the move we did see on oil back towards the end of June 2025. The same could be said with the WTI. I would want to look at more long opportunities, especially looking at a region of support that we have been holding out for quite some time after the massive move to the downside, and we might see prices of oil going to fill in these inefficiencies, possibly trading back above $70 a barrel in the next few trading sessions. Bitcoin has been holding above the $100,000 region for quite some time. We did get this massive push to the upper side. The market is taking a breather. This could be one of the best price action that we are seeing in the crypto market, whereby could this signify or signal that the market is gearing up for something in the near future. We do have this wedge forming currently at the moment, and if we do decide to break to the upper side, I would want to see more net long opportunities on the crypto market. Looking at currencies, starting off with the United States dollar against the Chinese yuan. The Chinese yuan has been gaining strength over the past few trading days, especially after we did hit a massive resistance zone at 7.3497, and we have been holding this region. Prices did sharply decline over the past 106 trading days, losing almost 2.7% of strength of the dollar against the Chinese yuan. We could consider this move even starting out, and there could be potential further selling as a result of the weakness in the United States dollar in the upcoming few months, if at all the Fed Reserve do decide to cut interest rates. Looking at the euro against the USD, once again, I'll be looking at more selling opportunities on the dollar, meaning I'll be looking at buying opportunities on euro if at all we do break this region of resistance. The most recent high that we have formed around 1.17894. If you do get a candlestick that closes above this region, a retracement, then I might look for further buying opportunities to the upper side. The same could be said with the British pound, and the British pound, I've been looking at this position whereby we do have relatively equal lows below 1.33699. If at all the market does come below this region, rates liquidity below this region, we have a change in state of delivery. I would want to look at further buying opportunities on British pound against the United States dollar, potentially coming back to these highs that we formed back on 1st of July at 1.37800. GBP JPY, looking at the Japanese economy, whereby we do anticipate these people to start raising interest rates very soon. We might anticipate a stronger yen, and I would want to look at how this trend line is going to behave in the upcoming trading sessions, whereby if we do break this trend line to the downside, I would want to look at long opportunities on the yen, meaning I'll be selling GBP JPY. Finally, looking at the Nikkei, the Nikkei has been posting really good gains, and if at all the data comes as expected, this upcoming week, I would want to see the Nikkei possibly moving back to all-time highs around 42,448. That's going to be my opinion for this upcoming week. Stay safe. Have a blessed week ahead of you.